Hi, welcome back to the channel. Now, in this month's analysis, I'm going to walk through another really high-level broader market overview. I'll be covering all of the major indexes and asset classes, and as usual, I've got around 20 individual stock ideas for your watch lists going into December. Now, it has taken around 20 hours to prepare, present, edit and upload. So I do hope you find a lot of value from my hard work. For those of you that are new and maybe just stumbled onto my work for the first time, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, if you picked up last month's analysis, hopefully my work helped keep you in the market amongst the sea of negativity. If you follow me on Twitter, hopefully my daily posts have helped as well. I'm told I've got pretty much everything spot on. Now, going into the Christmas period, I will also be covering a lot of the market warning signals. Over the last couple of months, as I'm sure we've all noticed, the best players have been scoring the most points again. And with mega cap tech breaking out, the big question is, can they keep grinding higher and taking the market higher? So before I get into all of my charts, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of risk management and systematic process. I think most of you know by now I don't use any magical Harry hindsight indicators. I timestamp absolutely everything, which is hugely important. I'm one of the very few who go on the record with their work. Now, who is my work for? If you are an investor, a trader, if you're into options, if you are a financial advisor or a money manager, you'll probably find a lot of value from this analysis. But my work is not geared towards buy and hold forever, as I do believe in managing risk. I'm looking for structural trends that last weeks to months, and I like to use logical price levels and targets. I've got clients at most of the major investment banks now, and my work has also been nominated for industry awards as well. But please do pause the video. Very, very important disclaimer. Please do smash the like button and subscribe. It really does help with the YouTube algorithm and obviously helps to get my work a little bit more noticed. And I do have a bit of an announcement at the end of today's video as well, so please do watch to the end. But let's kick things off with my longer term view of the S&P 500. Now, I've lost count of the amount of times that I've presented this now. I've posted this numerous times over the last 12 months, just highlighting upside targets. Very, very logical for me for the S&P 500. They're up at around 6,700. Now, I'm often asked about time frames on this. I think when I posted the chart originally 11 months ago, my view was maybe an 18-month period that we could achieve the targets. Now, ultimately, we're kind of there or thereabouts a lot sooner. But we have today broken out and confirmed a breakout above that 6,000 round number level. So for me, if we can get a further sustained move into year end, ultimately my upside targets remain 6,700 for the S&P 500. Now, very good risk on, risk off indicator I'm often asked is the 10-month moving average. Nothing's perfect in the world of technical analysis, but I do find that having signals are often better than listening to Doommonger ABC on StockTwits or Twitter or wherever you get your information. Above 10-month moving average, you just remain bullish, and if you move below it, it can help you bypass dot-com bubbles, financial crisis. You can bypass a lot of the carnage. Obviously, there becomes buy points below that, but just if you're worried about longer term structural damage to the market, you can use the 10-month moving average. But seasonality, as I have been highlighting over the last couple of months, is traditionally quite bullish going into year end. We've had a monster near 6% move in the S&P 500 so far in November. So for those of you that have continued to buy stocks and stayed in the market and stopped listening to all the Muppets on FinTwit, congratulations. December, I'm sure most of us are looking for some kind of meaningful Santa Claus rally. Just to be very, very clear on the Santa Claus rally, it's the period between Christmas and New Year and the first couple of days of January. But traditionally, seasonality is in the bulls' favour. So I'm hopeful that we can have a decent December. Of course, I don't expect the same performance in December as we've just had in November. But certainly the stance that we have, still bullish for the time being. The NYSE composite is another big chart for me, just a kind of bigger, broader view of the market. We have broken out above the 20,000 round number level. I'm very, very comfortable with this. As I've just been communicating to our clients this afternoon, I would have reservations on my bullish thesis if we do put in a failed breakout above this 20,000 level. I'm often criticised for being a perma bull, but what I will say to that is that I understand when to get defensive as well. A lot of my time-stamped work is about getting our clients defensive ahead of big moves to the downside. I'm very good at it. I'm told I'm very good at it. And like I said, one of the warning signals will be if it gives up and breaks below that 20,000 level. The triple Qs, obviously, a lot of attention. Everybody's invested in mega cap tech in some capacity, I'm sure. Again, the message to our clients has been over the last month is just don't overthink it. Still hopeful that we're breaking out above this $500 round number level. It has been a bit choppy over the last couple of weeks. I think we can all probably see that with a lot of the mega cap tech names. Many of the names I'll be getting into in just a few minutes. But for the time being, again, I think you've just got to remain bullish on the triple Qs for the time being. And the chart for the Dow hasn't changed. For me, still working with those upside targets there up around 480. The Russell 3000, again, broader view of the market, going out at new closing monthly all-time highs. But is there a catch-up trade into year-end with some of the riskiest names? I think that's the big question I've got at the moment. I think we just need to have a look at the performance of the small and the micro caps over the course of November. There's been a huge outperformance there. And if the Russell 2000 can break out and if the breakout sticks the landing above 245, that might be an environment where a lot of the perma bears start to lose their minds because you're seeing a lot of the riskiest stocks rip 20-30% a week. That's the type of environment you're going to have if the small caps break out. To our clients over the last couple of weeks, I've just been highlighting that the micro caps might be the catch-up trade for the rest of the year. Again, that's kind of played out this month. Like I said, huge outperformance from micro caps. I think with micro caps, individual stocks can be very, very challenging because they're up 10%, down 5%, up 20%, down 10%. Not everybody can deal with that volatility. But if you want a kind of broader exposure, maybe the microcap ETF, IWC, back to all-time highs, makes a lot of sense for me in the current environment. As long as this breakout above 130 holds, then certainly there's logical upside there up to around 160. Now, the VIX at the moment, it's a big focus of my work. I don't overcomplicate it too much. You'll see a lot of analysts with very complex and smart looking charts. Still yet to find a VIX analyst that can demonstrate competence, but there we are. But the VIX for me is just a very simple buy zone. I think if you're below 20, you're buying stocks, if you're between 20 and 30, that's in an environment where it's really a lot more challenging. You just kind of bat singles. You've got the hell no zone. And if you follow my work closely, as I know many of you do on FinTwit, the VIX was a massive indicator for buying up that dip back in August. I've just popped a graphic up on your screen with my time-stamped chart, which signalled the exact market bottom on the 5th of August. But as it stands at the moment, I don't really see anything in VIX or credit spreads that are leading me to the conclusion that Armageddon is upon us. I know there's a lot of economic analysts, sure, that kind of monitor my work. I'm not really seeing it at the moment. I understand the whole economic side of things. I get it, but it's not being shown in price at the moment. And if it does start to be shown in price, you'll find that the economic Armageddon is probably being signalled by a failed breakout in the major indexes or something to that effect. Gold is another big one. My chart for gold has not changed over the course of the last few years since it's broken out above 2100. Our target still remains 30,250. Gold just has had its first down month in quite some time, as I'm sure some of you gold bugs will have noticed. But for me, it's a very, very clear Fibonacci chart, and 3,200 remains the level for me. Now, I am about to get into around, I think I've got maybe 22, 23 individual stock ideas for your watch lists. If you're still here, it tells me that you're getting a ton of value from my analysis, or you're at least enjoying it mildly. So please smash the like button. Like I said, it does help with the YouTube algorithm. I only upload once a month. That's just because of the time and the sheer size of my client base now. I don't have the time to do any more than once a month uploads to social media. So your like and your subscription does mean a lot. But let's just dive into some of the charts. Now, I am just going to share quite a few charts from my chart book. So these are some of my best charts that I really like at the moment. And so Deere & Company is breaking out to new all-time highs. Now, this has been a consolidation below all-time highs for a number of years. I put this to our clients last weekend, and it does look like it's breaking out. There is some decent upside objectives there if this breakout can stick the landing. Nvidia, again, I think maybe there's a misconception with my work that certainly I do focus on a variety of different technical setups. So one of the things that I'm starting to be known for, I think, in the technical community, and certainly with our clients, etc., is my ability to find the buy low, sell high levels. Nvidia's actually been a buy for us at 100, and it's already met upside targets. So the big question I've had over the last couple of weeks, especially with the earnings, is it going to kind of put in that failed breakout, or is this level going to hold up? Now, of course, I'd love to just see Nvidia hold up here, because the correlation that Nvidia has with the triple Qs, if it does start to kind of do an about turn here and pull back, then it's probably not good news for the broader market just because of the weightings, etc. So today, observed, Nvidia was up around 2.5%, nearly 3% on the day. So my bullish thesis is still intact at the moment. I do have very slight reservations on it at the moment. So again, I just kind of want to see this kind of 130 level hold up. And if that 130 level holds up, I think there's every chance that 174, 175 becomes a target. Same message with Coinbase. I did observe today that Coinbase was down around 3-4% on the day. Crypto was up. I don't know if somebody, maybe Cathy Wood's selling or something, but the bullish thesis that I have is still intact at the moment. Like I said, I look for buy low, sell high opportunities. Recommended this at various points as well. And ultimately I'm working with previous all-time highs there at 430 as ultimate upside objectives. Lam Research as well, looking at this from a potential buy low, sell high opportunity. I would like to kind of see this next week certainly start to advance, and maybe a buy point around 75. And what I do like about these charts is you can define the risk against the recent lows as well. So perhaps a move above 75, maybe stop around 68, obviously targets up around 100. Apple going out at new, threatening to go out to new all-time highs. If that's the case, our target moves to $341. Now Palantir is obviously massive. Not a day goes by that I don't get asked for an updated chart on this. I've been covering this on the channel for months and months now. And yeah, for me, it's very, very straightforward. We're obviously going to a new closing weekly all-time highs today. So if you're bullish like I am, congrats to everybody. 69 is the level for the next target for us. Just using Fibonacci extension levels now. I don't know if these levels will ultimately have merit at this exact moment in time. We'll soon find out, I suspect. But certainly I'm just remaining bullish. I'm not overthinking it. I know there's some of you out there that are crying about valuations, etc. But I would just encourage you to go and have a look at some of the biggest companies of all time and see what their PE ratios were looking like early on as well. For me, very, very straightforward. Bullish Palantir. Potential pause level here at 69. A break above that, I'm fully expecting $100, but hopefully the market holds up going into year end. Meta, again, consolidating. This probably encapsulates what tech has really been doing over the last couple of months. There's been a lot of sideways chop. We are stuck in this little sideways range. A breakout above $600. I think brings in 860 as the next target. So I think Meta might be worth adding to your watch lists. Google, big pullback. The DOJ news hit the stock over the course of the last 10 days. Again, I'm just hoping to see this 166 level hold up. Again, it's been a buy for us down at 150. And again at 165, so hoping to see this kind of 165 level just hold as support. If it does, then obviously previous all-time high levels, again Fibonacci being used on the chart. Looks like it has a lot of merit for this particular name. Netflix, again, I've been covering this on the channel for a number of months since it broke out above $700. The message again this month is just to remain bullish on Netflix. I don't see any reason at this exact moment in time to change my bullish thesis on it. The target that I've got is the $1,000 Fibonacci round number level as well. So no change to this chart over the course of the last few weeks. If you're bullish Netflix and you're out there watching, congrats. But it's a risk management game at this point. I wouldn't advocate buying a new position up here, just to be super clear. But $1,000 is the level that we're working with. And same with Tesla. Again, I've been covering this for a number of months, both on my YouTube channel and on X. And remain bullish. The chart there for us is 410. Now, again, some mega cap tech names, Amazon. Now Jeff Bezos has been selling a significant position over the course of the last 2 months, as I'm sure many have noticed. But it has now gone out at a new closing monthly all-time high. So the market has kind of absorbed Bezos and all his selling pressure that he's put onto the stock recently. So the target for me, again, it's a Fibonacci chart. I'm working with targets here around 223, 224. Snowflake, again, if you've been following me on X, huge performance on earnings. I had one of the charts, or one of the hedge funds that I monitor is Brad Gerstner, Altimeter Capital. Now, he's been bullish on Snowflake for a long time, and obviously monitoring 13F filings, etc. Big part of kind of the work that I do, and obviously translate it into charts. But Snowflake has been a monster buy low, sell high opportunity. The The target that we're currently working with there is around 200 to 205. Certainly there'll be a reevaluation at that point as well. But if you're out there and you've had Snowflake, congratulations. It looks like Starbucks is potentially breaking out of a bullish flag pattern. Again, Stan Druckenmiller, another new 13F filing addition. I suspect he's been buying it in here somewhere. But if Stan Druckenmiller is buying it, then it makes a lot of sense to be looking at buying it as well. Not a big fan of the coffee these days. I much prefer my local coffee shops, but it looks like it is potentially breaking out. Spotify, again, monster breakout over the course of the last few weeks on the back of really positive earnings. The targets that we're working with there are up around 585. CCJ in the uranium space, again for me it's a Fibonacci chart, breaking out to new all-time highs. Monthly closing high just gone out this month, and maybe up around 84, 85. For me, CCJ is just one of a number of the uranium names that are really interesting to me at the moment. If you go and have a look at some of the small cap uranium names, I think the tickers are SMR or NNE. Two of those names have been recommended to our clients over the course of the last 6 weeks as well, and they've done really well, just playing into the whole small cap, micro cap theme. But I know a lot of you out there prefer kind of the safer names. Maybe don't have the capacity or the bandwidth for the 10% swings, but CCJ, certainly the leader in the uranium space. Chipotle, again, looks like it's potentially breaking out above $61. Again, makes a lot of sense there. Decent earnings growth, obviously $85 billion market cap as well. So targets for us are up around 69. Goldman Sachs recently just met upside targets. I've been covering this chart on the channel for a number of months. So target is met. If you own Goldman Sachs, congratulations. But it seems to be stalling here at Fibonacci levels, and I think another breakout. Again, lofty upside targets. These are numbers for names like Goldman Sachs that are, they're 6 month, 12-month timelines. They're not momentum moves at all, but certainly if it does break out, then very easy to define the risk with potentially new positions. Again, another name that I've been covering on the channel for a number of months, buy low, sell high, and it looks like it's potentially breaking out, new closing monthly all-time highs. The target that I'm working with there is still up around 350. Airbnb, now Airbnb pulled back significantly on earnings, but I am keeping an eye on this level around 141, 142. If it does break out above that, then potentially there's 20% upside there for Airbnb. Samsara, now they have earnings coming up on Thursday, so this might be one to consider post earnings. Now this is currently one of our highest conviction ideas. As you can see in the commentary, I did hold a position until Monday when I've cashed in some options, but I think wait and see what earnings does. I think if this $50 level holds up, then that might be one to consider. Post earnings. Now, last few names, we've got Shopify. Again, potentially could break out above this 115 level. Again, big earnings growth, 200% over the last 12 months. It's moving very well. We've got DraftKings potentially breaking out of a triangle pattern. And again, if previous pivot levels near all-time highs hold weight, then there's lofty targets there up around 64, 65. Datadog again breaking out on the back of really positive earnings, so I think provided you're above 140, there might be some scope there as well. And we've also got Robinhood also potentially breaking out. Now it's already met our first objective there from the breakout at $25, but previous all-time highs are really, really high. But please be aware, there is a very strong correlation with the crypto markets and Robinhood. I'm sure we've all noticed it. So Robinhood is one of those that can quite easily be up and down 10% quite routinely. So as always, please do take that into consideration. Now, if you're wondering who I am and what it is I do, please do jump onto our website at honeystocks.com. We're currently doing our annual Black Friday promo where it's 20% off any membership for the next few days. So please do check that out. All of our transparent timestamp work is all laid out. I only use my own charts and my own data, but just to show you what it is that we provide access to our premium weekend analysis every weekend with all of our best charts and our weekend hot list. Provide access to all of our highest conviction investment ideas. I'll show you what that looks like in just a second. And also our midweek halftime analysis is included as well. Every Wednesday, put out a 5-minute video with a market update and a few trade ideas. Now, within that, we also provide access to a really wonderful, highly intelligent community of investors, professionals and traders from all across the world. Provide access to all of our chart books which cover the most liquid stocks, ETFs and commodities from all across the world. And if you are new to technical analysis, I do include full access to a complete technical analysis program which I'm told is exceptionally well built out and helps a lot of beginners as well. But just to quickly show you what our highest conviction investment ideas look like, this is the recent idea that went out for Snowflake. Obviously monster performance. Block, another big performance over the last few weeks, recently met upside targets and potentially looking to break out again. Nvidia, again, touched on that already. Big performance there from Nvidia. Spotify's been an absolute monster, and Dell has been a solid performer as well. But just to show you the ideas that I put out to our clients are all logged. I timestamp all my work that I mentioned that at the beginning. So I publish the list of ideas that I've put out to our clients on our website for complete transparency. So feel free to go and check those out. Make sure that the types of stocks that I'm recommending are the types of stocks that you like to buy. I'm not recommending pump and dumps. I'm not recommending low quality stocks. It's all high quality stocks with usually solid fundamentals behind them, etc. But I've done this every year for the last 6 years, so please do go and scrutinise that and figure out if the types of stocks that I like to recommend are the types of stocks that you're interested in. But I think generally speaking, I think my work's really fitted for more those that have a mid-term approach, maybe folks that are trying to play the day trading game and keep getting chopped up. Maybe you're just looking for a bit more consistency. Maybe you want to kind of learn more about a systematic process, or maybe you're just too busy with work, life, family, business, jobs, whatever your deal is. Please do check out our website. We've got a wonderful community, and also with my offering, if you need a second opinion on a chart, my platform is very easy to navigate. You can message me any time of day or night and I will get back to you in a timely manner with my own chart for you. So like I said, please do check that out. We're running our 20% Black Friday offer at the moment. So if you have stuck here to the bitter end, thanks as always for watching and have a wonderful weekend. Thanks.